Hey guys, welcome back to the channel, best place for long-term stock investors. Today, we will be looking into Technovation. It was once a darling in the Malaysian stock market technology space, quote unquote. But today, it is down quite bad, quite big. We will investigate as to whether or not this is an undervalued company. Lots of people are telling us that it is. We, as a disclaimer, do not own any shares in Technovation, but we are very excited to be checking it out. And guys, as usual, none of what we say is financial advice. If you need that sort of advice, please speak to a professional. We are just doing this for purely educational purposes. Hey guys, before we begin, just to let you know, we have a totally free masterclass just for you to sign up for in the comment section or the description, where we will guide you on how you can build a 6 to 7 figure portfolio using the power of stock investing. Go check it out. Okay, Jonathan, so let's look at Technovation. The peak was in February last year.
Yeah.
And since then, it is down 78%. And when you look at the year to date, it is down by nearly 2/3.
Actually, I'm quite curious. What is their IPO price? I believe it's even lower, right, than the IPO
it's a
price.
bit. I think it's higher.
Slightly higher.
Usually, what is shown on Google is a bit higher.
Price.
Yeah. Is the closing price.
Right.
So it's a bit higher than that, lah.
Okay.
But it was a we look at this company before, right, in our semiconductor deep dives.
Yes.
But yeah, let's start off by learning what is Technovation. We know they are in the space, but what in the world they do. Now, as a disclaimer, Technovation is in the tech space, and to understand exactly what they do or exactly what they manufacture requires some time.
Yes, exactly.
So we are only going to scratch the surface here, because if we go deep, this video will be very, very long. So
yeah, actually their website is very simple, and you notice that all of their taskbars are all actually at below.
Yeah, that is nice stock video lah.
Yeah.
So who we are? Let's start there. Right.
Okay.
All right. So we innovate through technology, semiconductor equipment, and semiconductor material business unit.
Yeah, I believe they did a short form. They call it SEBU, SEBU, and the other one is SMBU.
Okay.
SMBU, yeah.
Now, this is an interesting thing. I cannot see what they are actually doing. So we know they are doing a semiconductor equipment and material business. Do not know exactly what do they do. Do they have pictures?
Yes, I think they put it under our business.
Okay, let's go.
It's gonna take a while to load. Oh, blue sky, nice. Wait, what?
Okay, blue skies.
Okay. Hold on, it's coming up. Scroll down. Overview. Wow, they are.
Yes.
Okay, it's a pretty interesting, because when you click on each of their business, right, it's like separate.
All right, there you go. So these are what they call, they do die sorting machines, test handler, visual inspection. So they remind me a little bit of Vitrox.
Kinda.
A little bit.
Yeah.
Right? They build all these machines.
Yeah. I believe Vitrox is more towards of a BCB vision kind of like system service.
Right.
Whereas for Tech, I believe it's more towards like a wafer packaging.
Wafer packaging.
Yeah. So wafer is like much more smaller.
Yeah.
It's like a die form, and then they have to like test it out, and then they have to like package it.
This is
everything.
before the PCB, right, is constructed already.
Yes, correct.
And guys, if you want to know a lot about this, you can actually check out a video review I did of Mr. Peter Lim's book over here. Very interesting. He actually goes into quite in-depth into the entire semiconductor value chain. So go check that video out.
Yes.
So we can see straight away that they are in the semiconductor sector.
Yep.
And they are doing wafer, part of what chips come from.
Yes.
And what you want, the next thing I will do, which I will not do here, but if I were analyzing, I would ask, well, where is the wafer when it comes to the entire value chain of the chips or semiconductor? How early are they in the manufacturing process?
Right.
right? So that gives me a sense. Now, I also know straight away that the company is in a somewhat cyclical industry.
Yes, definitely.
Right? Somewhat cyclical industry. However, they are a little bit different in that they sell the equipments to test some of these things, right? Might not be as cyclical, could be wrong. Let's look at the financials later on. All right, guys, if you didn't know, we have a one-on-one mentorship program where you can apply for, where we level up your stock investing based on tailor-made solutions. If you're interested, you need to apply. Not all of you all will get into an interview. It's only 20% of you all will do it, and even fewer will get to hop on the program. But if you're confident that you can qualify, you can click on the link and fill in your details in the comment section or the description. This is the...
I think it's the Cebu, the
Cebu.
semiconductor
So let's
equipment.
look at Akurus, right?
Yeah.
Okay, it's in Mandarin now.
I believe... Wait, I think there's an English translation. Yeah.
Okay,
So
how come it's in Mandarin? Interesting.
Yeah. I believe because Akurus is a Taiwan company, right?
Right,
So
right.
you can straight away just look at... Yeah. And
So...
correct me if I'm wrong, if I can remember correctly, this business is more towards like the soda ball.
Soda balls.
Yeah,
okay.
manufacturing of soda balls.
So we would have to figure out how important are soda balls, right?
Yeah.
So they are not manufacturing machines anymore, but they're manufacturing soda balls.
Yes.
So I would be very interested to find out which one is more profitable.
Yep.
Right?
Yep.
To learn about it. So again, won't spend too much time here, but let's move on to a little bit about the financials.
Yes.
So let's look at the revenues.
Yep.
Let's look at the gross profit. Let's look at the operating income, and let's look at the net income.
Okay.
So what is interesting is that the company has been growing.
Yep.
This is very healthy amount of growth based on a P&L basis.
Yes.
But the share price is dropping. Right.
I believe it's because of the bottom line.
Okay.
That has been hampering. Yeah.
Fair enough.
Top line is well, but the bottom, they still, I believe because there's like one instance, they actually paid out more bonus to their employees to reward because they actually made more. So, and then that actually caused their net profit to drop a lot. And then for another instances, why the net profit actually dropped is because I believe there's like lesser demand from their customer or some OPEX kind of cost.
Right.
Yeah, if I can remember.
So we'll discuss that a little bit later on.
Sure.
But let's move on. Oh, sorry. Yes, one more thing I want to put out.
Yep.
We want to see what is important to the company, right? Based on this. So you can see that the drop from revenue to gross profit, I know it's a bit hard to imagine, but the drop from revenue to gross profit is actually, I would say, the same as the drop from gross profit to operating income. So this is
more or less
375 versus 196, so that's about 180 million, I want to say.
Yeah, so it's like a 50% drop.
And then gross profits to operating income is about 130 million. So the raw materials and all that are slightly more important.
Yes.
But the people is also very important.
Exactly. Yeah, because they are engineers, right?
Engineers.
Yeah.
Right.
So, and in order to retain them, of course, you have to pay them quite a good amount of money. Yeah.
So this is where it gets interesting, because if the market is punishing them for rewarding their staff, is that necessarily a bad reason to lower your net profit? That's something for us to think about, right?
Yep.
So if you go to the balance sheet right now, let's see if they are a relatively safe company.
Yeah.
Right? Okay. Let's see how much debt that they have.
I think if you scroll down, there's like a total debt. Or you want to look at one by one?
Total debt.
Yeah, here.
Total debt. Okay. So straight away you can see it's a very safe company. There's a lot of cash involved.
But is it really truly from their operations, or is it from common stock?
Let's check. Yes. Good.
Okay, so this is common stock.
Aha. So a big chunk of their money came from common stock. They did a rights issue, which I believe happened in Oh no, sorry, that's tangible book value. Apologies.
No,
It's
sorry.
common stock. Correct.
I believe it's not right issue. I'm not sure. When did they went IPO already? Was it 2 years ago?
2018. Yeah.
2 or 3 years ago, right?
Right.
So
something happened.
So this is something that we need to like find out a little bit. So let's have a look at something. Usually when I check whether they are raising, whether it's a private issue, a private placement or right issue, I just like go to this website and then it's just bonus issue actually. Okay.
So all right. Interesting. Yeah. So they not much. So if it's just bonus issue, then we know that the cash is quite real. It's from the operations.
Yeah.
And to give a sense, right, if we can go here, the market cap right now for Technovation is
about 1 billion.
1 billion, right?
Yeah.
So let's do 1,000 lah, right?
Yeah.
Just do it in millions, right? Just put there.
Mil. Yeah.
Okay. So then we go to the net cash, right?
Yeah. If you scroll down, I believe you can. I think there is the net cash already. Net debt.
Net debt.
So there is -2.
So 300 billion. Let's just round it off, right?
Yep.
Net cash 300 billion. So you're in effect paying for 30% discount.
Yeah, exactly. Just nice 30% discount.
Right. And if you include the net income, you are looking at let's see.
I think you have to scroll up all the way up. And then go to income statement.
We'll go to...
By the way, if you guys don't know what this is, enterprise value.
Say 60 million, right?
Yeah.
So you are looking at a valuation, quick and dirty valuation of...
Wrong one.
Oops. Sorry.
Yep. Okay.
Of nearly 12 times, right? If you round it off.
12 times.
That is very interesting.
Yeah.
But what I will do is I will net off later the bonus that they paid their staff, and let's see how much more they would make.
All right. Right.
So before we move on, let's look at the cash flow. Right, everything looks good. Again, based on the balance sheet, I can tell the cash flow should be pretty decent. Okay, up and up. Even in the latest 12 months, right?
Yes.
It is nearly 100 million. And when we look at capital expenditures, they do have high capex.
Yes.
But it is quite cyclical. Sometimes it's a bit lower. Sometimes it's a bit higher. So important to take note.
Okay, I think I cheat a little bit also because I studied a little bit about this company.
Okay.
So I believe they are spending capex and they are also allocating a portion of funds because they are actually expanding their business unit. So right now they have the Cebu and SMBU business unit, right? So there's going to be 2 more business unit that is coming in the next, they claim it their 10-year plan. Okay. So yeah. Sounds great. Yeah. And they did mention in their latest quarter report, which we will be looking at it later, that the 3rd business unit is actually commercializing. It's already currently operating. Okay. And they actually hired a few employees already. Interesting. Interesting. If you're enjoying the video so far, remember to like, comment, subscribe, click on the notification bell so that whenever new videos pop, you'll know it fresh. If we look at it now, the company is also paying dividends. Yes. But the capital expenditure, as I said earlier on, it can be quite significant, as you rightly pointed out. Yes. But what you want to always figure out, and this is why we go deep into our SIB program, you want to figure out what is growth capex and what is maintenance capex, right? You want growth capex, especially if it's in a growth area. Hopefully, this area is in a growth area. We have to study more. But the essential idea is that if they spend more money on capex on growth areas, if it's growth capex, that's a good thing. Yes. So now, before we move on, as usual, we also want to look at the ratios. Yeah. Right? Let's look at the ratios. So returns on capital, not a good look. Yeah. They have to spend a lot more. Yes. But remember, the way returns on capital are calculated is the EBIT or the operating income. Yep. So you will also need to later adjust a little bit, right? Let's just plot it out. Right. Let's see. Oh, yeah. Returns on that. Profit margins are relatively stable. Always a good sign. You don't need to be too stable like Sabah Dynamic, but yes. Yeah. So cash conversion cycle now. This is probably a bit alarming.
right? They take a year
Hmm.
to go from making the products and then selling it.
Yeah, that's
Yeah.
quite a concern as a
Yes.
shareholder.
And a lot of it is their inventories and their sales outstanding. That's the big chunk. Whereas their suppliers, they have to pay very, very quickly, as you can see here.
Yeah.
Right. So this is not a company in a big position of power, but that doesn't mean it's a bad investment. It's just a risk that you have to understand.
Yeah,
when
and
you
you
invest in
can,
this
if you
company.
compare the payables, right, against the sales outstanding, I believe they also don't really have much power on their suppliers, right? Do they have?
30 days, right?
Yep.
So again, not always rosy, right?
Yes.
Actually, many things are not rosy for MeTech right now.
Yeah.
So important for you to understand this. But do not be misled, right? Necessarily from this 5% drop, because this company is a cyclical company. You have periods where they can make these huge amounts of returns on capital. And then right now, obviously, it's in a bit of a downturn.
Yeah.
But let's look at anything else you want to look here.
No, I think that's about it. You can look at their
Yes.
Yeah. So this is something their latest quarterly reports. And I did cheat a little bit again. I studied a little bit. So if you look at the highlighted plan that I put there, so they have like these strategies that is formulated under the 10-year blueprint. Basically, they didn't really mention here, but they have 4 business units that is going to be up and running. So the 2 business unit is your Serbu and SMBU. So the 3rd business unit is actually Commence, and like I mentioned just now, it's already starting to like commercializing. It's starting to be operating, and what this means is that potentially there will be more OPEX spending.
Okay.
And I think the management also did admit that they may see lower profit margins in the short term. Before the return from investment to materialize. So that is something that you need to know. For the short term, there will be definitely pain for MeTech because they are currently expanding and they are spending a lot of money for their business expansion and all these business units. So
let's look at the bonus that they gave. Do you remember where it is?
The bonus is actually, I believe, is 2 quarters ago.
So let's head over and check it out. I'm just very curious.
Okay.
Right.
So let's just scroll up. Let me see. Was it this quarter?
Yeah. Do we have the quarterlies here? Let's go to Bursa.
Hold on, sirs. Yeah, one thing I like about MeTech is that they actually have like English and Chinese kind of like business. Wait, let me see. Is there anything over here?
Oh, is it an explanation? Maybe it's in the explanation.
Yes.
Bonus, is it? No bonus.
Okay, I cannot remember. But I'm pretty sure for those who actually study, you will know this. You actually will know this. Maybe it's this one. Maybe it's this one, yeah.
Okay, so if it's this one, that means that it was in an old...
Yes, it was an old one.
Right.
Wait, you scroll up and see whether did they mention anything about operating expenses. Is it? It double. You scroll down. Employee bonus.
Right.
7.7 million.
7.7 million. Okay, so it's not big. Right?
Yeah.
Right, it's not big. So clearly, we are in a situation now where you are buying this for 12 times earnings. Seems cheap. 12 times earnings will give you roughly, I want to say about 8%, an 8% yield.
Yeah.
Right, you add on dividends, so it's a bit higher. In this environment, it is not bad, right? Because the interest rates are rising.
Yes.
However, do take note of where we are in the cycle, in the semiconductor cycle. You can watch some of our previous videos where we share our thoughts on it. That is our quick dive into MeTech Innovation.
Yeah.
Any last words?
Not really. I believe we didn't cover the management, but the ownership, if you look at the directors, right, I believe the CEO, he actually is holding about 60% stake in the company. So he's actually, I I believe he's putting where his mouth is. A mouth is. So he's actually quite huge in the skin in the game. So Mr. Oh Kwang Eng, about 44%. So yeah. You are kind of like, when you invest in this company, you kind of like betting in Mr. Oh lah, whether he really like execute his future business expansion, whether would it turn profitable for the company in the future. I think time will tell. Yeah, but for now, definitely there is a lot of pain for this company. So
the key thing, I think, just to end, is you want to be looking out for the suppliers, or rather the customers for MeTech.
Yeah,
which I believe they do declare in their annual report.
If you cannot find it in the annual report, you can find it in the prospectus. Because usually they will disclose it over there. Yeah, you can find it there, and you want to track the sales of MeTech's customers, because that will be a leading indicator, right, for MeTech's improvement in their bottom line. Yes, and but also take note that semiconductor sales globally now is on a downtrend. So even though it is at 12 times earnings, looking attractive, it should be a cause for concern in terms of your timing. But perhaps more on that in the future. We talk a lot about this in our SIB program. And anything else? If there's nothing else, guys, thanks for watching the video. Share it with MeTech shareholder, or a shareholder wannabe for MeTech, and I will see you in the next video.